All right, we are live for today's YouTube Live. I'm not quite sure how much you can see this, but this is not your traditional normal YouTube Live today. I'm in Davos, Switzerland on a snowboarding slash ski vacation. Even though I'm on vacation, of course, the markets don't close, money never sleeps. And I've actually been receiving a lot of emails from people and over the past couple days. And basically, my hunch from what I'm seeing here is that a lot of people think that this is going to be your typical buy the dip scenario that we're seeing. And S&P 500 dropped by 12% over the past few sessions, and I don't actually think, we don't actually think this is the same environment that we had for the past 8 years. Volatility is definitely on the rise, and we actually think, and our proprietary algorithms are actually forecasting at the S&P 500 and stocks in general to make a series of lower highs at this point, which is certainly out of consensus. Doesn't mean there aren't things to buy, but I wanted to sound out a cautionary note that we do actually think that the environment has changed in the sense that not only is there more volatility, but we could actually see lower highs, and we could see the S&P start trading in a much choppier environment than people think. So we've had a beautiful opportunity to buy some stocks late last week, but for the most part, that's probably what we're seeing and thinking not going to be something that's going to be sustainable. So if you guys have a comment, or if you like this, please leave it down below. Give us a thumbs up, like. But I felt this is an important risk management note because I've noticed that a lot of people really think this is the same exact scenario that we've had over the past 8 or 9 years. And I do really think, considering what's happening from a volatility spectrum within cross asset classes, what's happening from an inflation perspective, interest rates heading towards 3%. Doesn't mean markets have to crash, equity markets, but it does most likely forecast a more volatile environment that a lot of people see. If you look at something like the volatility of volatility, which I don't want to get into right here, right now, but those are the kind of things we look at for gauging what the potential volatility ahead might be. And right now, we're actually thinking that the S&P 500 and actually maybe even the Russell 2000 are going to be making a series of lower highs, at least for the foreseeable future, which is probably, let's call it 2 or 3 months ahead. So from our perspective, that's the call. Want to keep it quick and to the point. If you guys have any questions and comments, please leave them down below. I'm going to do a couple more runs on the slopes today, and we'll see you guys in the next YouTube Live. Take care.